Good afternoon. This is Chris Brecher with the Simpler Stocks Premium video for September 14th, 2016. Another day of rising interest rates worldwide I'll get into in a second. ES is right now down 28. NASDAQ down about 36.75. As you see, it's about 30 minutes after the close, so this is pretty much settled out in here. Russell down 22.70. Dow Jones Industrial Futures, this is the actual futures of it, down 225. Industrial's actually down 258. This, to me, is the big deal in here. Bonds down 115. I'll get into that of why I think the significance. Also, the transports down 153. These are big deals in here. Right now, the dollar up 47.47, sort of a flight to quality there. Gold down 420, crude down. As you see in here, this is almost like QE unwound. Every single thing down. Guess what else was down? Commodities were down. All but cotton. Every single thing just going straight down. And to me, that just shows how many years did every asset class go up. And what that did was it created bubbles when the bond market kept rallying and rallying, or yields going lower and lower. And that's exactly why a little adjustment in yields can lead to a big sell-off in the overall market. So today we had the advanced decline, very negative. And so the whole idea in here, you had the VIX up 269, up literally about, what is that? Man, that's up over 10%, way over 10%, almost 15%. Thing you have to understand about the negative advanced decline in here, and this is how I'm going to start what I'm talking about in here. Bond rates getting crushed. One thing you have to add in here, I've always had the long-term bond. You need to put the note in here now, the ZN. The reason being is this, the 10-year note is also falling apart. When the 10-year note's falling apart like that, and the 10-year notes all around the world are falling apart, the actual prices or the yields going up, all of a sudden that thing of there is no alternative starts to go away. What do I mean by this? I'm going to show you a chart a couple of days ago. This is the Japanese 10-year rate. It went from negative to almost positive. This is the UK rate going from 0.50 to 0.85. Those are huge moves in 1 month, by the way. Huge. This is the German Treasury yield going from minus to positive. Why am I showing these? This is what happened on Thursday and Friday, not today. Now I'm going to take this back and I want to show you something interesting. We're going to take these off the left. Here's the SPX on the left. And I'm going to show you a daily chart, and even a 78. Now what I'm going to do is show you the bond chart right here. This is something I published on the Simpler Stocks Premium side. I'm going to make it smaller so you can see it. See on how this rally here, it seemed like nobody cared in here, and then all of a sudden everybody cares all at once. That's the way it always goes. The whole idea in here is, see this rate going up and see the market going down? The key is, of what I've seen in the past, is when the SPX sells off like this, usually the bond rates start to go down because there's a flight to quality. This time, the rates have stayed up. And let me show you. I'm going to show you actually a rate from today. So we're going to go to the JPT. And we're going to go to a 3-month chart. Now, I just showed you what it was on Friday. The reason I'm showing you this is check out the 3-month chart today. If I can get it to work. Give me a second. This is today. It went even higher. This didn't go down. Almost every time that we've had a sell-off in the overall market, you watch yields plummet. Look at this right here and put the SPX on the left. And I want you to put this on a daily chart. And you can put the notes, you can put the bonds. I'm going to put just bonds to show you an interesting graphic. Almost every time, even with Brexit, what happens? We sell off, bonds go nuts, which means the yields go down. Then there's nowhere to put your money, and the market comes back. Go in here and put in 3-year daily. It's always wash, rinse, and repeat. 3-year daily. Go back and go to January. Notice something in here. notice that as we were selling off on the left, the bond market was rallying on the right, and sure enough, then the market goes up. Same with last August, same thing. What are you seeing different this time? You're seeing the market is selling off this time, not because of worldwide events, not because of a plunge in oil or the Chinese market getting crushed like last August. It's going down because of bonds. So this time when we're selling off, the bonds are selling off too. So that whole theory of now yields are so low, there's nowhere to put your money, that's not working right now. That's a real dangerous situation in here. That doesn't mean we're going to go straight down, but the whole idea is this is something to definitely monitor. The other thing we're watching in here is this. Oversold, but at support. And that's why we had a vicious bounce yesterday. What I see happening in here is this. We're going to form something like this prior to the Fed meeting right in this area, work this off, and then we have that another leg down, which would occur perfectly in late September and early October where we've had a lot of destruction before. So very interesting in here. One thing you should know in here, when I show these charts, I want you to realize that we have the $7 30-day trial for simpler stocks that includes the email alerts where I send out all these kind of ideas. If you were wondering in here, we have a chat room in the morning from 9 to 10 in the morning. That comes with your subscription. Premium video, a lot more in depth than what you're hearing now, where I'll go over specific ideas. Email alerts I'm very proud of in here. Has index and futures charts that have been spot on for weeks. Stock trades and chart ideas have worked really well. And unusual option activity, just ask anybody. These have worked really, really well. Haven't showed any of the last couple of days because the last couple of days, momentum is the key, not the options activity. There's a time and place for everything. So I hope you've enjoyed this video. I will be back with you tomorrow, and we'll see if the SPX support holds around 2100. Take care.